Assalamualaikum everyone and good day. My name is EIZAAD FAREEZ 2024-233-456 and today we are evaluating the competitive performance of two Asian financial giants, Singapore Exchange Limited SGX and also Hong Kong Exchange and Clearing SKEX for the 2003 and 2004 period. SGX, established in 1999, is a mass regulated leader in derivatives and securities with a market cap of approximately 18 to 19 billion Singapore dollar. On the other hand, HKEX, established in 2000, is a primary gateway to mainland China. It operates the London Metal Exchange and boasts a significantly larger market capitalizations than SGX. Okay, starting with the liquidity, SGX showed an explosive growth. Its current and quick ratios doubled from 1.14 to 2.20 times, and its cash ratio surged 95.1%, meaning it can almost cover all short-term debt with cash alone. Conversely, SKEX remains stable but saw marginal declines. Its current ratio dipped slightly to 1.09 and net working capital dropped to 29,051, suggesting a smaller liquid surplus compared to SGX's massive cushions. Regarding leverage, SGX is increasing its use of debt. Its debt-to-equity ratio jumped to 69%, and reliance on long-term debt rose to 54.4%, while its interest coverage (DIE) dropped to 52.8 times. It remains very healthy. HKEX operates with a much higher total debt load, with a debt-to-asset ratio of 85.7%. However, its long-term debt remains incredibly low and stable at 0.13%, and interest coverage improved to superior 103.33 times.
Hi, my name is NATASHA BINTI KARIM and my student ID 202444178. Moving to the activity ratio, let's look at how efficiently this exchange utilized their asset. SGX show a mixed bag. Fixed asset turnover slow, but collection velocity peak with receivable turnover hitting 76 times. While HKEX is maximizing its infrastructure, raising fixed asset turnover to 11.5 times. Profitability in 2024, SGX saw significant margin compression. Its ROA halved to 12.2% and net profit margin dropped to 35% through a unique capital structure, keep ROE at 100%. However, HKEX remains stable. While margin dipped slightly, its ROE actually improved to 24.2%. I will continue with the comparison year to year. Number one is liquidity analysis. While both exchanges started to similar liquidity profile in 2023, but in 2024 saw a significant divergence. SGX aggressively strengthened its short-term asset, and HKEX opted for a strategy of stable. In 2024, SGX and HKEX pursues contrasting financial strategy. SGX aggressively boosts its short-term safety, doubling its cash ratio to 100 and built massive liquidity cushion, but did so at the cost of higher leverage and increased debt sensitive. HKEX maintained more stable, conservative profile with lower debt level and consistent profitability. Number 3 is activity analysis. In 2034, SGX demonstrates superior operational efficiency, but with riskier capital structure. It significantly outpaced HKEX in payment collection speed, driven by the high account receivable turnover and generate more revenue. However, this efficiency is offset by an aggressive shift toward higher leverage as SGX increases its debt to equity and long-term level. Last one is profitability analysis. In 2034, SGX lead in capital efficiency with superior 100% ROE and higher ROA through its profit margin compress. Its contrast, HKEX maintained a stronger net profit margin, providing more effective at converting revenue into gain. Ultimately, SGX excel at generating shareholder return, while HKEX leads to overall operation profitability.
Hi, my name is NURHIDAYAH binti MOHD and my student ID is 20244355756. Next, This section presents the year-to-year comparative balance sheet analysis for Singapore Exchange Limited and Hong Kong Exchange and Clearing Limited from 2023 to 2034. For Singapore Exchange Limited (SGX), total asset increased by about 9.3%, mainly driven by a strong rise in the current assets, especially cash and cash equivalents. This reflects an improvement in SGX liquidity and short-term financial strength. Non-current assets also increased, supported by higher right-of-use assets and fixed assets, indicating continuing long-term investments. On the liability side, current liabilities decreased significantly, mainly due to a lower trade payables and the elimination of short-term borrowings. However, non-current liabilities increased, driven by higher long-term borrowings and lease liabilities. As a result, total equity declined slightly due to lower retained earnings. Next, for Hong Kong Exchange and Clearing Limited, total assets grew by approximately 12%, supported by higher financial assets and receivables. Current assets increased steadily, while non-current assets recorded moderate growth, reflecting stable investment activities. Total liabilities increased by around 13%, mainly from higher current liabilities related to trading and clearing activities. However, non-current liabilities decreased slightly, indicating a stable long-term debt structure. Equity increased by 5%, driven by higher retained earnings and reserves. In conclusion, SGX shows strong liquidity improvement and short-term financial flexibility, while HKEX demonstrates stable asset growth, controlled leverage, and consistent equity expansion.
Assalamualaikum and hello everyone. My name is LIYANA binti AHMAD and my student ID is 20242000248. Today, I will explain about what is what-if analysis. What-if analysis is a method of changing input values in a model to see how those changes affect the results. It helps with the decision making and forecasting by showing possible outcomes under different scenarios. Today I will show you how to use the what-if analysis. First, the first scenario is how to assessing Hong Kong's exchange earning sensitivity using data tables. Let's take a look at the table below. At the left, we have the total operating revenue, and at the top, we have the net profit margin from 15% until 67%. And next, we look at the orange table with the total operating revenue and current net profit margin. To find the value of the net profit, we need to multiply the total operating revenue and current net profit margin. And now we have the value of the net profit. And next, we look at the tables below, which is the two-way data tables. I will link these tables with the net profit at the top. Okay, now I will select these tables and look for the data tab and go to the what-if analysis and choose the data table. For the row input cell, I put the current net profit margin, and for the column input cells, I put the total operating revenue. Now it shows that the revenue has increased based on the net profit margin. Also, use this step to calculate for the Singapore exchange. Next, we will move to the scenario 2, which is the scenario manager. Scenario 2 is analyzing Hong Kong Exchange strategic net economic income forecast using scenario manager. let's take a look at the table. At the table here, we have the item. The below of the item, we have the total revenue, operating expense, cost of credit, and net profit. Now we have to calculate to get the net profit, and I will deduct all this value. Now we have the net profit value. For the scenario manager, we need to select this table and go to the what if analysis and select the scenario manager. I already had the scenarios based on the best, and worst. Let's take a look at the base case. The base case is the same value that I put in tables, and for the best case, I increase the total revenue, the operating expense, and decrease the cost of credits. And we see that the net profit has increased because the total revenue has been increased and the cost of credit has been decreased. And let's next, worst case. Worst case is I decrease the total revenue, increase operating expense, and increase the cost of credits. For the worst case, we see that the net profit has been decreased because the total revenue is more higher than the base case. And other than that, we also can see the summary of these tables. Click the what if analysis again, click the scenario manager, and click for the summary. For the summary, we click here. For the summary, and it will show the scenario summary for the Singapore Exchange. And from the summary, this step also can be used for the Hong Kong Exchange, and this step also can be used for the Singapore Exchange, and to calculate the best case, and worst case. And that's all from me. Thank you.